Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 8th of July, 2020. And as we predicted in our video yesterday entitled Gold Demand Moves from East to West as Prices Rise, gold has very comfortably sailed past the $1,800 resistance level today and actually was heading towards 1820, but managed just about to reach 1818 and has fallen back slightly at the time of writing to 1809. Silver too has had a good day, so far breaking its resistance level of $18.50, reaching as high as $18.79, and currently rests some 10 cents below that figure at $18.69. This is an incredibly bullish move for both precious metals, and we can expect silver to try at least and reach for the outlier in our prediction in the weekly update published last Saturday of $19. Gold may try and attempt to strive towards 1850, and whilst we cannot rule this out entirely, it will be a little bit of a stretch for it to do so, certainly this week. However, tomorrow's weekly jobless claims figures could have quite an impact, depending on what they report. Apart from that, the Producer Price Index final figures for June will be published on Friday. But other than those two, it looks as if geopolitical events are going to dictate more as to the price of precious metals, and certainly the dollar, than perhaps any further published data, notwithstanding the two items we've already just mentioned. Now, equity markets have, for most of the day, been in negative territory, with UK and European stocks falling between 0.5% and 1%. However, US markets have recovered a little this evening. The time here in the UK is 2000 hours GMT plus 1, with the Dow up 40 points, which we're expecting to go higher, to be frank, and the Nasdaq up 60 points. Again, we're expecting this to rise too. The dollar index is down almost half a point at 96.4, which partially explains the rise in commodity prices. Even oil prices are up, albeit only slightly. Now let's take a brief look at what Bloomberg had to say about half an hour or so ago. Bloomberg article, dated July 8, 2020, 7:45 p.m. GMT plus 1. Headline: Tech stocks extend gains, gold rises, dollar sinks. US tech shares rose as investors looked past tensions between Washington and Beijing and sought out companies thought to be insulated from rising coronavirus infections. Most stocks fell on the S&P 500 index, though advances in high-flying megacaps like Apple Inc. and Amazon.com left the gauge slightly higher. The Nasdaq Composite was on the verge of another record. HSBC Holdings slumped after a report that some of President Donald Trump's advisors proposed a move to destabilize Hong Kong's currency peg to punish China. Banks led European stocks lower. Gold topped $1,800 an ounce, while Treasury yields inched higher and the dollar slumped. Analysts are debating what comes next for the US economy as states allow businesses to reopen. But with much of the world stuck at home, investors have been bidding up tech shares. That pattern appeared again Wednesday, with pandemic-sensitive sectors like airlines sinking even as online names held up. While the market largely reflects investor optimism, the COVID situation is seemingly evolving by the hour, and we've also reintroduced trade tensions to the mix, so there's a bunch to digest, said Michael Löwengart, Managing Director of Investment Strategy at E-Trade Financial. Tensions between the US and China have been growing after Beijing asserted broad new powers to rein in opposition in Hong Kong, pouring cold water over hopes the world's largest economies will patch up relations soured by a lingering trade spat. Stocks in Shanghai powered ahead for a seventh day. Investors have been drawn to China's markets amid efforts by regulators to boost the attractiveness of stocks and hopes for an economic recovery. Signals pertaining to the coronavirus have been mixed in recent days and weeks. The number of confirmed cases in the United States surpassed 3 million Wednesday, largely seen as a negative development, as hotspots including Arizona, Florida and Texas continue to see cases rise. However, the fatality rate has remained low, a data point flagged by optimists. We're sitting here kind of saying, well, what comes next? And it's not really clear, said Kathy Jones, Chief Fixed Income Strategist for the Schwab Center for Financial Research. There's a lot of question marks about how this will play out in the second half. Here are some key events coming up. All eyes will be on the US weekly jobless claims report on Thursday. Singapore holds its general election on Friday. And if we just go down here, we can see currencies. The Bloomberg dollar spot index dipped 0.5%. The euro advanced 0.5%. The Japanese yen gained 0.3%, and the British pound rose 0.6%. Bonds, the yield on 10-year treasuries rose 1 basis point to 0.65%. Germany's 10-year yield declined a basis point to minus 0.44%, and Britain's 10-year yield was unchanged or little changed at 0.18%. MarketWatch has also produced interesting commentary, suggesting, or at least one of their contributors suggesting, that we may indeed see silver hit $20 within the next few weeks, and gold possibly $2,000. Now, we're not so certain whether we'll achieve that in the next few weeks, but let's take a look at what it says. MarketWatch article, dated July 8, 2020, at 2:03 p.m. Eastern Time. Headline: Gold up for a fourth session to log another 9-year high as traders see few limits to central bank stimulus. Gold futures climbed for a fourth straight session on Wednesday to score another settlement at their highest since 2011, supported by the prospect of a lengthy period of government and central bank stimulus to support economies harmed by the COVID-19 pandemic. The pandemic, economic and political headlines, tariff tiffs, China worries and relentless buying by exchange-traded fund haven seekers, said George Giro, Managing Director at RBS Wealth Management. The World Gold Council reported Tuesday that global net inflows to gold-backed ETFs reached $39.5 billion, topping the previous annual inflow record from 2016. Gold has been a haven for investors looking ahead to volatility in stocks, currencies and low rates as aggressive global stimulus ensued, said Giro in emailed commentary. On Tuesday, the Federal Reserve's number 2, Richard Clarida, did little to disabuse investors of the view that the Fed would do whatever it takes to limit the damage from the viral outbreak. We have a lot of accommodation in place. There's more that we can do. There's more that we will do if we need to, the Fed chairman said on CNN International. The Fed's balance sheet has grown from $4 trillion back in March to about $7 trillion, as policymakers rolled out a cavalcade of programs intended to inject liquidity into markets that have been nearly frozen due to fears of the economic impact of the pandemic. Precious metals have benefited from loose monetary policy, as bullion is viewed as a hedge against uncertainty and a protection against a wave of money printing to help stimulate economic growth. Gold's explosive appreciation to levels not seen since 2011 is partly due to fears around the longer-term impacts of repeated central bank intervention, said Lukman Otonuga, senior research analyst at FXTM, and as negative themes in the form of trade uncertainty, geopolitical tensions and growth concerns sap investors' confidence, gold may become a prime hotspot for safety. Meanwhile, September silver settled 46 cents, or 2.5% higher at 19.16 an ounce. Bear in mind that's futures, after it gained 0.6% in the previous session. The settlement was the highest for a most active contract since September 2019. Gold's break above $1,800 has triggered a big move in silver, which can easily be in the $20 in the coming weeks, said Peter Spina, President and Chief Executive Officer at goldseek.com. Gold has so many positive price drivers in its favor, with the key player being negative real rates, he told MarketWatch. The march to new highs is on, and the momentum is growing, meaning the price will move up higher faster. Spina added that he does not expect to see a meaningful pullback in gold until it breaks past $2,000. So, to conclude, gold followed by silver are entering very bullish territory, and it's now becoming clear that silver is taking over on its monetary side compared with its industrial demand component. As we stated yesterday, we can expect to see modest but continual rises in precious metals moving forward. And as President Trump appears to move from one crisis to another, or at least that's what the media are reporting, and his electoral prospects diminishing, again at least according to the polls, just about anything, frankly, can happen. And this will undoubtedly prove advantageous for precious metals. Mentioned earlier, the geopolitical situation and any fights the president may pick with any other country will indeed have quite an impact on the dollar and precious metals as a result. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to the channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.